Fears that uncertainty over trade tariffs will trigger a recession gripped the U.S. stock market on Monday. A Reuters poll showed 91% of economists see higher recession risks due to President Donald Trump's shifting trade policies.
They'll be met with the exact same tariff.
But the White House pushed back on talk of a recession on Monday. The director of its National Economic Council, Kevin Hassett, said there were many reasons to be optimistic about the U.S. economy, despite concerns about inflation and predictions of a contraction in GDP in the first quarter. He argued U.S. tax cuts would boost the economy and said Trump's tariffs on Canada, Mexico, and China were already bringing manufacturing and jobs back to the U.S. Hassett and other White House officials have also repeatedly bashed the economy inherited from former President Joe Biden. But when Trump took office, GDP growth had largely exceeded trend for 2 years, consumer spending was strong, and unemployment was still near historic lows. Since then, several indicators have pointed to a softening trend, and a monthly survey of U.S. households out on Monday showed that Americans expressed more pessimism about their financial situations. Meanwhile, early economic data suggests the U.S. economy could contract in the first quarter of the year. Hassett called it a very temporary phenomenon. Trump himself declined to predict whether the U.S. could face a recession in a Fox News interview on Sunday. On Monday, economists at Goldman Sachs cut their forecast for U.S. growth this year and raised their forecast for inflation.
U.S. stocks plummeted on Monday, with the Dow dropping nearly 900 points to close 2% lower, the S&P 500 shedding 2.7%, and the Nasdaq nosediving 4%, its biggest daily percentage drop in 2.5 years. Monday's major sell-off followed a weekend interview with President Donald Trump in which he would not rule out the possibility of a U.S. recession. That unnerved investors already anxious about relentless tariff wrangling and other economic concerns, said Mike Muscio, president of FBB Capital Partners.
I think the speed with which the market is reassessing probabilities around recession is directly linked with the two things. One, uncertainty around tariffs and what the impact may have on inflation and just the general economic outlook. And then two, there's a bit of a growth scare that's going on at the same time. If you look at GDP growth in the fourth quarter, which was 2.5% plus, right now, GDP now, which is kind of a real cast, a nowcast forecast, it's not a forecast, it's a nowcast existing of what's happening in the economy. That number is like a negative 2.5% right now.
HSBC on Monday downgraded U.S. equities, citing uncertainty around tariffs. Tech stocks were under pressure on Monday as investors unwound yen carry trades, which involve borrowing Japanese yen at a low cost to invest in other currencies and assets offering higher yields. Shares of MicroStrategy and Coinbase dropped more than 16% and 17% respectively, tracking weakness in Bitcoin, which fell below $80,000. And shares of Tesla plunged 15.4%, the stock's largest single-day decline since September of 2020. The stock has given back all its post-election gains after CEO Elon Musk backed Trump and was tapped to lead his government efficiency effort.
Just for Mexico, sir, the previous one.
Same thing
Canada.
for Mexico.
That's
One
exactly
for Canada, one for Mexico.
Yes, sir.
They've been in the news lately, haven't they?
So right now, where we stand with the Trump tariffs in regards to the auto industry is that there's been a bit of a reprieve. They were technically supposed to start a few days ago. However, after some calls and some conversations with the Mexican and Canadian authorities, they have really pushed it back about a month. So we're looking to start these tariffs probably in the beginning of April. I think April 4th is the date that has been bandied about. So This is the second time that this tariff has been pushed back. So I think that's good news for consumers because it shows that there is a bit of a willingness with the White House to work on a solution so this doesn't have to go through. If it was set in stone, maybe it would have already happened. But the fact that it's not been pushed back but once, but twice, hopefully there's some wiggle room and they can get to some sort of solution that works for all parties. Right now, we're not necessarily seeing consumers necessarily going to dealerships in droves. I think they have to kind of be a little bit more aware of this story, but it definitely is making consumers, a bit on edge. And for automakers, I mean, I imagine that the frustration is high. I mean, producing a vehicle is no easy feat if you think of all the parts that go into it. So it's not as if they can do anything in the short term, certainly not in 30 days. The result is not really up to the automakers. I mean, if you listen to what Trump is saying, his whole thing is about, border control and stopping the, illegal immigrants from crossing the border and fentanyl and all those things. And that's nothing that the automakers have any control over. So it's like what they're being measured against is not something that they can actually do. So it really is between Mexico, Canada, President Trump trying to get to some solution that works. And then in the meantime, I think what would make the situation probably better for automakers is to make more pledges that they would increase jobs or, at least provide Trump talking points in some of his speeches, which we just saw a few days ago, that look like he's bringing jobs into the United States. These tariffs may never go through. We don't know that is going to happen. But if you are thinking about buying a car in the next few months, it seems to kind of make sense to move your purchase a little bit sooner rather than later, because if they do go through, the price effect won't be immediate. Whatever's on the ground at that point in time, it's not as if prices are going to change, but it's inevitably going to happen. So you probably want to get before the rush happens as well.
President Donald Trump returned to the White House on the promise that he could fix the U.S. economy. But right now, a lot of people are afraid he's doing more to hurt it. The stock market has fallen 7% over the last month. Consumer confidence is waning fast. And if you look at the situation, what's going on here is a profound sense of uncertainty. In fact, the Economic Uncertainty Policy Index spiked more than 40% over the last month. And the co-creator, Nicholas Bloom, a Stanford economist, told me he's worried that signals a possible recession. So why is that? Simple. People are seeing tariffs go in and out on allies like Canada, Mexico. President Trump has threatened tariffs on Europe, autos, computer chips, pharmaceutical drugs. And if those tariffs are to be effective, that means prices would go up. And if prices go up, inflation gets worse and growth slows. All of that is a problem for Trump and is something that his team will have to figure out how to fix. Thus far, what they've said is that the country needs to go through a little detox, and Trump himself in a TV interview didn't shy away from the risk of a recession. None of that is going to be reassuring to the American public.
The stock market had another bad day today. The S&P 500 was down almost 3%. It's about its worst day in 3 months. The issue today for the market is worries about the economy and particularly how much damage President Donald Trump appears to be willing to sustain on the economy because of tariffs. Donald Trump wants to extract concessions from trading partners with tariffs, and the worry on Wall Street is that these tariffs will slow down the economy, make people and businesses less willing to spend. So whether or not the tariffs wind up being as big as people expect, the fear of them and the uncertainty about them could cause plenty of damage on their own. And that's what Wall Street is telling us today, is that they're worried that people and businesses will just spend way less money and feel less confident to buy new things, to make new investments. And that sent the stock market down today.